Gold is mixed this Monday morning ahead of a week full of U.S. economic data. We have Frank Holmes and Gold Game Film next. Frank, thanks for being back with us.
It's good to be back. I was in Vancouver last week and getting lots of insightful information from promoters and newsletter writers and listening to investors.
Frank, let's start with the U.S. economy. And is it back on track after a first week quarter? We have jobs numbers, we have the Fed and the GDP all out this week. What are you expecting?
Well, I'm expecting lots of mixed signals, and the bears will look for anything that's bearish and the bulls will look for anything that's bullish. I think that our weight of the evidence is what we try to mention many times, is that the global PMI's Purchasing Manufacturers Index is a forward-looking index, and the world is actually positive. The 1 month is above the 3 months. We're going back-to-back months of showing this strength, and China is key to this.
Now, Frank, in your recent commentary, you also speak about China's manufacturing activity, which has expanded at the fastest pace in 18 months in July as new orders surged. What could this mean for gold?
Well, what's really important is the love trade, because rising GDP per capita in China and India, which is 40% of the world's population, the Chindia effect is a rising consumption per gold, and this is the year of the horse. So many little gold horses will be bought and given for love.
Frank, on that note, let's get to the OT segment now, opportunities and threats for the gold market. Let's start with opportunities, and this is for metals in general, but you were saying how investors are buying metals from zinc to aluminum at the fastest pace since 2009. Let's talk about that.
You know what's really interesting is last fall, Alcoa stock took off. And no one could understand with back numbers looking terrible, everything was horrible. And all of a sudden, 9 months later, it's coming out that there is a shortage of aluminum and cars are going more and more to aluminum. So you're seeing all of a sudden a pent-up demand. So aluminum looks healthy and robust. Zinc is also one of those great commodities, which is used for many different products in manufacturing. If you want to coat your steel, your iron ore, etc. So I think if you believe in cars, you're seeing the resurgence in car sales. I think that zinc is very important. And along with that for PGMs is platinum and palladium.
And Frank, what are some weaknesses and threats that could affect gold this week?
Well, a negative number, real interest rates spiking up. That would be, which we don't see. We're still at negative real interest rates. And over the next several weeks, we're going to write some specials on forecasting that the gold supply is going to actually be shrinking for most of these companies have been forecasting expanding production. We're going to highlight, I think, going forward, some of these other factors that are going to drive gold prices higher. If we looked at real interest rates today, according to CIBC, based on historical data points, gold should be at $1,400 an ounce.
Now, Frank, obviously this will be a very important week. We have the FOMC, we have GDP, we have jobs numbers out on Friday. What could be the touchdown pass here for gold?
What would be a touchdown pass would be anything that's negative that takes interest rates down, where you have negative real interest rates. And in any country that has negative real interest rates, that is, what will the government pay you to buy their 5-year government bonds, take away the CPI of that country, and if the number is negative, it's very bullish for gold in that country.
Frank, thanks so much for your thoughts.
Great.
And thanks for watching this edition of Gold Game Film with Frank Holmes. We'll be back next week. In the meantime, email us, newsfeedback@kitco.com. Thanks for watching.